Welcome to TradeTheMBA.com. This is John. This reports for the 14th of October, and you can see that, well, some people think that, a carnage event like this can be reversed instantly. Not so much. When you have that kind of delayed collapse situation that just, has been building for, well, quite some time here as we've, continued to escalate higher and higher. Rebound was to 76%. Every attempt above it just pushed us right back underneath it, and you can even see we're starting pre-market significantly below that. Again, there are world considerations to taking place, particularly escalation. Now, even though you have peace in the Middle East, you've got escalation with the Russia-Ukraine situation, where they successfully continued to bomb some of Russia's oil facilities. This could have dramatic impacts. We see the continued problems within France and other areas as far as Eurozone. And domestically, still no budget. And, while we're surviving, things from a market standpoint are starting to show cracks, because none of this seems to have a resolution anytime soon. We now have orange between cyan and red, so that's a continuation pattern. Well, it's a continuation of down sideways in this particular case, particularly with the decaying DOC. No difference here when you look at it from an MBI standpoint. Magenta is still below yellow. Even though shorts faded off somewhat, that just means that the depth of the fade has just limited range at this particular point. But any tick up of MBI white at this particular stage, that may get attractive to a lot of shorts when they see that 50% come in, and they'll start to get aggressive at that particular stage, because that would indicate that there's broader selling going on. And that's just how it plays out. Everyone is looking for that moment of weakness, and when they find it, they exploit it. For the longest time, it's been exploiting shorts because it's been straight up. But now you have justifications. You have slowing economy and these kinds of things that justify a more warranted, in-depth look at where things are going. So, broad context is just a matter of following those readings, and in this particular case, it's been south for, well, even from a Nasdaq standpoint, the S&P was sell before this stage. The NQ a little bit later, but didn't start until the intraday readings began for the big decline rate for Trump's comments about China, and then of course everything got pacified, but not really. Because the damage was done, and you showed a real vulnerability. Though, wiping out some of the extreme margin and things like that is not necessarily a bad thing. It sort of wipes the slate clean and start over again. Treasury standpoint, we're still at the higher side of things for no good particular reason, that's for sure. And oil not rebounding from that. And again, now this is interesting because given what took place in the Crimea attack against the Russians, further reducing their ability to create their shadow fleet and or supply, and will that drain into the supply that currently exists? The market doesn't seem to think of at this point, but it's hard to imagine that won't have broader implications. We will see in time, but something to keep an eye out. That would indicate that the forward drop in oil would be a future belief that demand will diminish based on lower economic activity. Yeah, that's a real concern because that's significant. From a euro standpoint, unable to hold anything at this particular stage because what do you flight from where to where? From a dollar to a euro, really? That's not even really a thing, is it? Particularly since all the currencies are facing the exact same debt ratio situations. Where are you going to go? Well, you've got gold and you've got crypto. Those are your choices. And gold has certainly been the answer for everybody. So pretty straightforward from that standpoint. Some think that the gold is, extreme and done its move. You can say that all you want until it's actually done. We'll know when we see a significant move below the 33 level and short interest rise in it that has some significance. At this particular point, you see people shipping silver and gold by planes because there's a physical shortage and people are demanding actual, delivery as opposed to certificates, which that's a really interesting one, because if that develops into a more pronounced state, that could cause another set of liquidity panic separate from one that we've ever seen. We'll pay attention to that, keep an eye on it. BTC and them never recovering from this Fade off, of course, just doing what? Yeah, that's right. Filling positive extremes. And they've done that completely now. And even though this was a quick spike to cover them, and you now had a full close all the way below it, so it's pretty clean. Um, but that's just an indication that this damage is spread to the point where people have had to liquidate and move things around in order to uh, balance their books. It's just the way that happens. ETH, not quite as negative as BTC, so you can see some residual strength differences there, and ETH has been far more resilient within this move. So we look at it from our 50K, you had the big decline. We filled the positive extremes back there. You had your immediate abrupt turnaround. Everything was fine until right about here. You had an NBI weight spike above the 33 level and Magenta not cooperating. And, started staying below there. And even though price held up, it was just a matter of time. And the expectation is at least to the 50%. If it continues, it would be to the zero. So almost at the 50% now. I would expect that we reach that, and then it would be whether able to push back up again before a move back down towards a retest of that low. So, yeah, not out of the woods yet. Everyone was hoping for that complete turnaround. Doesn't always work out that way. Here you go from a 5-minute chart. It was pretty chaotic, actually. So this is that volatility that you could see was starting to spring up because, some of the math wasn't making as much sense. And then when you throw in some of the broader geopolitical situations, and of course now there's going to be all tariff all the time again. So that's become the new narrative again. So we're back to that. So, and of course the Fed's still believing that that's inflationary, to see it, but okay. When we look at it from the Asian session is where things started to decay right before it, and then the European one has just been all ugly all day long, and no happiness for the Eurozone. And some of that may just be particular to the Eurozone because they're a pretty miserable state right now, but is it going to carry forward into regular New York trading? Probably a little bit. So we'll see how it all plays out. But that's the long and the short of it. Things are getting interesting. It's going to be the fun rest of the month. If this is the first half, second half of October is always an interesting one. And it looks like we're going to have some more of that. So very excited for that. As always, anything relevant, I'll put on our team chat. Have a good one. Trade well.